Hi folks, how you doing? Let's do some trade recaps for this morning here. So first thing I was watching, the big name tickers like usual, Apple, Facebook, Roku, Tesla, and a couple others, but those were the main picks for this morning for me. Facebook this morning was bullish. We were gapping up over our 205 key level, which was acting as support last week, and then when we broke below it, and then yesterday we tested it as resistance. So for me, that level had significance on the daily and hourly time frame. So that's what I had marked in general. So we're gapping up above that level, and I have a bullish bias on Facebook based on the daily time frame. So the initial move was higher, and then we started chopping around this 206 area, holding the upper part of this inside bar. And my mistake was entering prematurely, for one, and not scaling in the size I wanted to. Instead of just what I did was I got in too early with too much size. Again, a big mistake, and I'm working on improving that. So again, this is just paper trading here, but we're working on improving our executions on a daily basis. So that was it. So you can see my initial entry was there with 1,000 at 206.68, and that was premature because after that we did consolidate for a few bars until we got the actual clear break above that and got up to 207 or so. So there was a clear resistance here that was showing up, and I was not trading it with any time and sales here. So again, I'm trading blind here. I'm just trading based on the chart price action. So it makes it even harder. Okay, so once we got the break, obviously then from there the trade looks great. Yes, so then stay in the trade and blah, blah, blah. So at that point I was staying in the trade as long as the 4 EMA was holding on the 2-minute time frame. And I took about 2/10 of the position off here, just because that was a nice move higher and I wanted to lock in some gains. And then I took another 1/10 of the position off there. This candle was crucial to hold the 4 EMA. If we did not hold the 4 EMA and get back below down here, it could signal that it would be a potential fake out and signal bulls to get out. Just a signal to get out. That's it. No questions other than that. But in fact, we held the 4 EMA, and using SPY as our guideline as well. So that was approximately around 950. At 950, SPY had moved higher and was chopping around sideways. So very important to be watching that at that point, okay? We did in fact hold the 4 EMA. Now this price action is just ridiculous. Like you can see, we're just grinding here, grinding 4 or 5 bars in a row. Each bar has a higher low than the next one. So there's no red flags yet, although if we get any kind of bear break at this point, it could signal a red flag. So we didn't quite get it, and in fact we moved higher. And again, using the EMA as a guideline is a great tool, in fact. And you can see here that I was holding through all of that. And now this is when it gets interesting. So I did scale out another 2/10 of the position there. So I have about half of the position left at this point. And then we get another, we're getting more of these kind of choppy price ranges here. And then we get a little bit of a bear trend bar there. And then after that, I decided to dump the rest of the position. So I didn't wait. As soon as we got the break below this candle, I got rid of the rest of that position. You can see 207.66 was the fill I got, and I just filled that. I just decided to sell at market because I don't play with limit orders and TradingView. I usually just do market orders just because it's simple. And obviously you get worse fills, but you know, in real life you get worse fills too. So yeah. So I dumped it right there. As soon as we lost the low of that candle, I was out, done, finished, lock in the gains, and that's it. And yeah, for sure, you could have bought the dip here, but I was done with that trade there. Next trade is ROKU. Let's take a look at what happened. So initial move higher in the morning, and then I decided to buy a break above the highs. That is a mistake. You know why? Because on the daily time frame and hourly time frame, these levels 131.80 and 130.88 were our lower highs on the daily time frame, on the hourly time frame. So this is a general resistance area. So I should not be buying breaks above highs in a resistance area. The better trade would have been, as you can see here, holding the 4 EMA on these two pullbacks, and it's an inside bar. That was a bullish entry on this candle right here. So the bull entry had to be here, not up here. That was chasing, all right? So as you can see, my entry, if you look at the entry price I got, let's see here. Yeah, it was 132.50, just under that. So that was way too high. And as you can see, that's what you get for chasing a trade. And then it didn't get any follow through because oftentimes breaks on these types of stocks, especially coming into an area of resistance, you might get a breakout in a direction, but it'll often fail. And Roku is great for trapping longs, shorts, anybody. So if you know how to play the fade moves against the trap traders, that's where the gains is, in my opinion. So there you go. So you got the fade, and I decided to sell there. I didn't sell the whole position. And then I even tried to take another long right there, assuming that this support was going to hold. This support being the lower high on the daily time frame. I can show you that level real quick. Right here. You can see as we've been making lower highs on the daily time frame, lower high, lower high, lower high, lower high, and then lower high down here. So this is what I was watching. 131.80 was our last lower high on the daily time frame before we got the bear break. So that serves as resistance. And let's go back to what I was telling you. Okay. So I tried to buy the dip again, and then basically I stopped out the trade once we broke below these lows. And that was an unfortunate loss because I was too big in the position again, and because I bought more up here for whatever reason, assuming that this support was going to hold. So that was a losing trade. So I'm analyzing it now and realizing why it was a loser. Very important to review your trades, guys. Okay? And I guarantee you're going to notice a big improvement in your trading if you review your trades in depth every day like I'm doing. Okay? All right, here we go. Now, this is where it gets a little interesting. So after this big pullback here, it is sure that any longs here were getting stopped out. Short-term traders are getting stopped out. So most likely when you see a shift in the supply and demand, we could get a kind of mean reversion. Again, another mean reversion. So I decided to buy the dip here, assuming that the 26 EMA was going to hold. And my stop loss was going to be just about above 130, I believe, at that point. So I was buying the dip. As you can see, my stop loss, my entry was 131.18. So that was a much better fill in my opinion because I was entering down near the lows right after we got this candle. And in fact, as you can see, we got some nice follow through at that point because there weren't many people left to go short here as it was a big sweep of liquidity. The longs got trapped, and then after that, there was no one left to go short, no one left to sell. So that's why we had a nice move up. And if you watch what SPY did at that point, hold on a second. That was at just before 10 a.m. Just before 10 a.m. SPY was still consolidating, so no correlation there. So that was pretty much it. It was just a supply and demand imbalance. Now, there we go. So I was selling. I didn't sell the whole thing. I sold 2/10 of the position right there. And then I sold more, and I noticed we were just consolidating and not getting much follow through, and any bear break I was ready to get out, and in fact that's what I did. So that was a better trade on Roku. So I traded it with smaller size than the first trade, so I made less gains than I lost on the first trade. So again, learning how to manage your losers, cutting them quicker, and learning how to scale in to potential winning trades. All right, now this is when it gets interesting as well. So it keeps getting more interesting as this price action is developing here. So you can see this bear break right here. Look at this bear break just after 10 a.m. SPY had the same bear break just after 10 a.m. Facebook had the same bear break. Apple had the same bear break, and we're gonna get to that one too. So you can see there is a direct correlation there between Roku and the market, obviously. And now look at what happened afterwards. Consolidation for many bars in a row until about 10:30. Now look at what SPY did after that bear break. It grinded up to a higher high. Roku consolidating sideways at that point is a huge red flag for bulls. And that is exactly why I decided to short it there, seeing that Roku consolidating sideways at this point, and the fact that we're into an hourly and daily resistance zone and we're now below it again and unable to get back above it, that is a red flag for longs and a most likely good short at this point. So I was shorting it here and then I scaled in again there, and then we got the bear break. And again, I'm fine-tuning my executions because I did enter. Okay, I didn't enter too big at first. I didn't. I scaled in the second half here. Anyhow, still fine-tuning those executions. Here I made the mistake of selling again, which I didn't want to do that. I hit the wrong button. And I covered a little bit just to lock in a little bit of gains. And always, I usually cover about 1/10 to 2/10 of the position to start. But it depends on the kind of trade, obviously. If you think the trade has more chance of getting follow through, then just cover a little bit. But if you think the trade is just good for a scalp, probably cover half or more. And then you get a great trade. Look, I was just covering as it was going down. Below that bear break right there. And yeah, so that's the trade on Roku. And I was basically using the low of the day as a reference point and just saying, okay, I'm gonna be covering the short as it goes down, and that's it. And now we're getting a little retrace, probably gonna end up being another lower high at this point. And yeah, all right, Apple. Well, this video is kind of getting long here. Okay, so basically this was the support level on Apple. That was the high of the day yesterday. Okay, right there, you see it. Yeah. So I was watching that. We pulled back directly to that level, and I said, okay, I'm going to try and make a long play with smaller size here based on the support of yesterday. I was watching the market at that point right after 10 a.m., and we were looking like we were going to reverse. So I decided to take a long trade. So I entered long here, and then I entered a bit on this breakout. I scaled in a little bit more, making my average just around here, just around 314.50 or 314.60-ish. Now, here's my mistake in the trade. I got faked out by this move right here. At 10:12 a.m., I got faked out, and because it was extremely bearish. That's an extremely bearish candle. But if you look at the 3-minute time frame, you can see that it held the 12 exponential EMA like perfectly, in fact. And that was my big mistake in the trade, is not having a wider stop and knowing that Apple has a tendency to have a lot of fake outs in either direction. So again, at 10:12 a.m., we got that bear break on the SPY, and then we moved higher from there. Yeah, so that was the correlation. Just at 10:12 a.m. exactly, there was a direct correlation there, and that faked me out of the trade. And in fact, what happened after? Break the higher highs and break the high of the day, obviously, right? Because that's what they do. That's what it does. So again, we're learning things every day as we trade these markets, guys. And yep, so I hope you learned something from this video, and have a great day. Bye.